Hey guys, welcome back to the Results Junkies podcast. We're going to be talking a little bit about travel today and oddly a little bit about AI. In the last 48 hours from time of recording, DeepSeek is the big thing that's out there right now. This is a Chinese-based AI startup that seems to be jumping leaps and bounds over competitors spending billions and billions more dollars, and it's caused a serious disruption in the AI space. We would be remiss if we didn't discuss this today, but there isn't a ton of information out there yet. Paul, how are you doing today?
I'm living the dream, man. You know, travel's picking up a little bit. Kids are back in school. We're trying to close deals. 2025 is underway.
I love it. I love it. And travel is as exciting as you remember it.
You know, it's not bad. I'm definitely taking advantage of more of the stuff I've learned from you over the years, including, and you'll laugh at me, but including, you know, just biting the bullet and checking out like the United clubs and stuff like that and getting work done from there and stuff like that. So I don't know. It's different. I will say, because, you know, you and I live in the Northern Virginia suburbs. I am really interested to see what happens with this whole return to office order that's kind of hit the federal government.
Yeah.
You know, it's
Yeah.
still early, but, you know, I was dropping the kids off. I usually do the mornings, and traffic has definitely picked up. And I wonder what that means for the airports over the next couple of weeks as well. So that being said, each year, though, as I get older, travel gets less and less glamorous.
It really does. And, you know, I've been traveling a little bit with my wife over the past few weeks. We actually just got back from Disney World. And as she's had, you know, like a handful of United flights, we got off the plane last night. And what'd she say as we were walking? She said something about a text I'd sent her on the plane. And her comment on it was, no, I didn't get that. I mean, the Wi-Fi doesn't work half the time anyway. And
Yeah.
It was a very seasoned comment from her. That, you know, of course, I felt that for years. But the travel malaise is real, and I've actually seen what I would call a slight softening in prices on some of the key routes that I fly, mostly in premium travel. So normally, I would say on peak travel days, I'd see first class cabins sold out completely, and maybe it's because the airlines are trying to stretch the pricing they're charging, and customers aren't biting, and so they're maybe reducing it a little bit closer in, and they're not getting those seats filled. But I have seen a little bit more premium demand, which to me generally dictates, you know, higher end business travel seems to be down a little bit. You know, whether that trend continues throughout the year, I think we've got to play wait and see, because to your point, you know, return to office mandates are certainly going to have an impact, you know, on this. You know, I think the nature of work travel has changed significantly, and we're going to talk a bit about that today during the show. But not. I don't think there's a sea change just yet in work travel in terms of sectors of it going away. I think sectors of it have shifted for sure. But let's dig in on DeepSeek. Quick bit of housekeeping. Show at resultsjunkies.com is where you can find us. He is at Paul Singh on all the social media channels. I am at Pizza in Motion. And at time of recording, you cannot download TikTok. Still exists, it seems, and some folks say that there are active discussions going on for it to be purchased by a U.S. entity. We're going to avoid that for the time being and focus on DeepSeek, which I mean, you know, my wife stays, you know, up on current trends for sure, but she's certainly not an AI nerd like you or I are. And she mentioned DeepSeek to me about, you know, an hour or two after the news started breaking. So, I mean, it hit all the mainstream channels, and effectively you're talking, I think the big news bulletin here is DeepSeek is claiming and seems to be showing test results of an efficacy level of all the top AI engines out there right now, using a fraction of the resources to do it. This sent markets into a tailspin, and it sent, you know, prognosticators running for the mountains, and all kinds of, you know, oh my gosh, NVIDIA insiders are selling their shares, and it's hard to tell whether this is the right amount of panic or not at the moment, but there's definitely a lot of panic.
You know, look, I think I mentioned the pre-show. I don't know enough about politics to stick my neck in there. However, you know, when I'm working, I might have like CNBC or something like that playing in the background in the corner of the screen or something like that. And so I've been watching the interviews that are coming out of Davos, which is happening right about now as well. And 4 or 5 days ago, so before this DeepSeek news, you know, one of the questions, and now I'm blanking on the names, but you guys can go check this on CNBC. But The reporter that was sitting there was asking a couple different CEOs at a different set of, at different times independently what they thought about like the AI race and stuff like that. And one of the things that I thought was that I didn't really pay attention to, that I didn't think was that interesting until this news for DeepSeek came out, was that one of the common questions they would ask is like, so how do you think the embargo, the U.S. embargo on export of, GPUs and things like that's going to mean
Yeah.
for the arms race and all that. And it was so interesting. At least a couple of the CEOs independently all said like, oh, look, that's not actually, that's factually a real thing, but practically not effective at all. In other words, one of them actually went on to say that he estimated on the low end that Chinese companies like DeepSeek had something like 50,000 NVIDIA H100s. Whether or not that's right or wrong is irrelevant right now. I think the thing is, though, is that like, I don't know that I put a whole lot of trust into the numbers, right? Because the claims are, hey, we did this for much cheaper, things like that. But there's no data or evidence to back that up. That would be like me saying like, I'm making this up. I respond to every email in my inbox in 37 seconds flat, 100% of the time. You as a recipient of those emails know that that is full well not true. But that is, but I can say anything I want. Anyway, sorry. Yeah, keep going on this. I'm sorry I cut you off there.
No, you didn't cut me off. I think you've got a great perspective that's different than mine on this. Not in terms of us disagreeing, just in terms of how you're looking at things.
Yeah. Okay. So there's two. Okay. So again, DeepSeek and the political ramifications and all that. I'm not qualified to even have too many opinions on it. But when the news broke yesterday and I was kind of just watching what was going on with the markets, there were two thoughts that were sort of bouncing around my head, and these are half baked, and maybe listeners can kind of make fun of me on social or email us and make fun of me privately, whatever works. Or maybe some of our friends will make memes of me on this. So we'll see.
Well, that's what the new Apple Intelligence is for, man. I can make a meme of you just like that.
That's right. Hey, can you teach me that actually? I need to learn that.
Yeah,
my brother-in-law is crushing
Charlie,
me on our family text chain right now with those memes.
Yeah, my 13-year-old son will teach you.
Okay, perfect. I got to pay him for his time, so send the invoice. Okay, so two thoughts bouncing through my head on this. The first is, there's a lot of talk about, AI agents and stuff like that. ChatGPT or OpenAI just released Operator, which is basically a tool that takes control of your computer. I'm, again, just for the sake of simplicity, just somebody's going to make fun of me for not saying this right, but just for the simplicity's sake, Operator is an agent that essentially can do complex tasks for you. So in theory, I could say, I'm going to make this up, but find me all nonstop flights between Dulles and Orlando on this date that have an aisle seat. And then that thing opens up a browser on my computer and actually starts taking control to do it. Now, here's the thing. So thought number one that was kind of bouncing through my head yesterday is that as a normal consumer, and I might sound horrible here, but just hear me out for a second. As a normal consumer, whether or not my data gets, sent to China or not, never really mattered to me, I guess. Even when we think about like TikTok, right?
Right.
TikTok and all the data going around or supposedly going around. Until it dawned on me that if AI agents are actually going to do what they promise to do, that would mean, in theory, that eventually they're going to have access to my credit card number. Because I might, in theory, if it's working well enough, I might say, and book the cheapest one. Well, now all of a sudden, thought number one is, maybe I do want to know where my data is going. At least with most US companies, there are rules, there is recourse, there are lawsuits, and there's the rules around data use are very clearly defined. Things get a lot muddier once you start crossing international borders. So that was thought number one, was like, I didn't really think I cared so much about where my data was going and my interest graph or whatever was going, until it dawned on me that if AI agents are going to do what they say they're going to do, eventually they're going to have access to my social security number, my credit card info, all that stuff. Counter argument might be that they already have that, but we'll see. The other thought that was sort of kind of, bouncing through my head yesterday was something we've talked about on the show quite a bit around platform risk. And this is again, half-baked thought. I'll eat crow on this if I have to, but one of the things we've talked about for years, you and I, is this idea of platform risk. And the simplest example we always pointed at was something like Twitter. Almost anybody that built a tool on top of Twitter using their APIs eventually got crushed because Twitter could change the rules at any time. They could change the price, and that could just destroy anybody sitting on top. And so we called that platform risk. And by and large, I would tell people like, hey, you should probably not go down that path. And it extended so much so where even a couple months ago on this show, I kind of said to people or I said on the show something like, I said things like, oh, a lot of these ChatGPT wrappers, and I said it I fully admit in sort of a condescending way. I would say like, oh, that's just a wrapper on ChatGPT or whatever. When the DeepSeek news started coming out, what I started thinking about yesterday, the other thought I was thinking about yesterday was this idea that maybe it's different with AI. Maybe the idea of platform risk with AI is slightly different in the sense that, the example I gave you in the pre-show is that we use closed CRM here at Strata for our sales process.
Mhm.
And, anytime if I want to catch up on like where an opportunity might be in the pipeline, there's a little button at the top of the screen that says summarize. And, it then summarizes, the 87 emails between our sales team maybe and a prospect. Between us, I have no idea what they're using in the back end. It could be an open source Llama model that they're using on their own platform. It could be a wrapper on ChatGPT. I mean, it might even be a wrapper on DeepSeek. I have no idea.
Yeah.
And so this other half-baked idea I've been thinking about is that maybe platform risk is a little bit different for AI, or maybe platform risk is a little bit different for companies that have AI features. In other words, they could theoretically change the back-end plumbing to some other infrastructure or some other model as the models improve. So those are the two half-baked thoughts. Feel free to poke holes or segue.
I definitely won't poke holes because I think we're at such an early stage that I think we're all theorizing where this is going, and I think you have a unique perspective on these sorts of things, and I think you're also using this more in your day-to-day business world. As I said to you in pre-show, I'm still turning a lot of the AI tools off because I don't think they offer enough upside for me from a personal business standpoint for things that they might filter out that I did want to see. So your thoughts on wrappers and how companies are framed up and what that penalty might be further down the road, I think are very valid in this space where one news story about a Chinese company causes the markets to tank for 2 days and people to sell off Nvidia at historical levels. So I think how companies will be scored and valued further down the road is completely fair game here. I think the way I look at this, I think the perspective I would offer is at more of a 10,000 or maybe even a 30,000 foot level, and I think there's a couple of thoughts that are spinning around in my head. The first is, and I said this to you via text, if the announcement of one Chinese company that virtually nobody in the world had heard of 72 hours ago causes the largest players in AI to panic. Well, I mean, panic may not be the right word. They're not openly panicking, but the market is panicking around them. It certainly tells me that there's a great amount of uncertainty in terms of the path forward for AI. Forward, not straight. And also that I really just don't have the requisite set of tools or knowledge to be investing in these companies with the right amount of sense, because I mean, the amount of value that disappeared over the past 48 hours is, I think, to some degree astonishing.
But I don't know that it's possible. I don't know that, a market swing over the course of 36 hours should be the basis upon which we second guess our thinking. Now, okay, the part I agree with you on is
I'm not second guessing. I'm saying I'm glad I'm on the sidelines.
Okay, that's fair. Yeah, that's fair. Yeah, I mean, look, I'm with you in the sense that I still don't know enough about this technology to be a direct investor in any of these things.
Yeah.
But like, I'm with you though. I think standing on the sidelines and watching it happen is definitely interesting. I think what we're seeing though, if we like zoom out a little bit though, I think what we're probably seeing is Moore's law, but applied to AI. And maybe some researcher is going to like figure out how to actually come up with a new term for it or whatever. But the point is, though, is that like the breakthroughs are going to happen faster and faster and faster. And this is all based on, by the way, the assumption that everything in that DeepSeek announcement is true and factual, which I don't think anybody independent has verified yet. Because in theory, like there is a case where if it was actually trained on NVIDIA GPUs that might have been, acquired not legally, Like, the fact is that it doesn't make sense for Nvidia stock to drop. Like, in other words, why did a company that puts out a model crush a company, or hit the market value of a company that provides the hardware to train those models? That to me
Yeah.
doesn't make sense.
Yeah. No,
Um, I,
I agree.
I would have expected more of a hit to somebody like Facebook, who just announced $65 billion of spend,
Yeah.
is open sourcing models, things like that. But
Yeah.
I don't know.
Yeah, it felt to me like there was a large scale sell off just based on, some level of uninformed is probably the wrong word, but underinformed fear. So that's one thing. I think the other thing I'd say too, and I sent you this link, and we'll include it in the show notes. I mean, DeepSeek is very clear at the outset that their data is housed in China. And you touched on this in terms of data models and what you'd share and things of that nature. But I think if we draw a parallel to where we stand with TikTok, I don't think you or I are privy to the sort of information that the government, call it senators and congressmen and women, are in terms of, why they chose the path they chose with TikTok to essentially ban it in the US, barring a sale to a US based company that would protect US based users' information. The less optimistic view might be that, that senators and congressmen and women are just not tech savvy and TikTok scared them and they made this, knee jerk reaction to ban it. But I tend to think it's probably a different explanation, which is anytime that Democrats and Republicans agree wholeheartedly on something, there's either a strong financial incentive for them or there's actual fire behind the smoke. And since I don't see the financial incentive for them to all collectively want to get rid of TikTok, my guess is that there is some level of alarm and some fire behind the smoke that they felt that there was some real risk for security risk, whether at a government level or a personal level, to the way that TikTok gathered information. And it
Yeah.
just makes me think that those sorts of things are likely to rear their head with DeepSeek. I think it could be even more difficult to understand how that data is transferred in these AI models for senators and congressmen and women to understand than it could in something like a TikTok, since DeepSeek is much less customer focused. But it wouldn't surprise me if we see a similar model now, where as part of this arms war, we start banning foreign-based AI models.
Yeah. I mean, I don't know. I'm afraid somebody's gonna really make fun of me on this one, but I don't know. To some extent, I agree with you. There's probably a little bit more behind the scenes happening that would cause, leaders to say, "Hey, we need to ban an app," right? But on the other hand, it kind of feels like a little bit of just, I don't know, show. Because look, here's the thing: when the banking system was starting to get figured out, 30 years ago, before PayPal and all that, and people were worried about money laundering and all these things. What did we do? Like, the government stepped in, started creating rules that we now know as KYC, know your customer, things like
Mm-hmm.
that, and heavily regulated the banking infrastructure. And they found this, somewhat reasonable, setup that allows for banks to start up and run and create innovative products for people like you and me, but all within the confines of a banking system that the government can at least see into. And it says, like, hey, if you withdraw more than 10 grand, we need to know about it. Now, are there gaps? Of course, every system has gaps. Where I'm going with this, though, is like, if we really wanted to fix the problem, if it truly was simply, air quotes, simply about where the data is going, that's a largely solvable problem, in the sense that, like, okay, this probably get me in trouble, but, like, you could theoretically, I mean, just like China's got the Great Firewall. I mean, that's a hardware thing. You can do that. Yeah. So it's kind of like, it sort of feels like show, because if we really want to solve the problem, there's probably other ways to really do this. And to your point, it could be blocking those things from coming into the country, via
Well,
IP addresses or whatever.
yeah, I think I would just say, like, I think just sort of slightly nuanced reply here. Like, I think, to be clear, I'm not saying that I believe there's actual risk. What I'm saying is that the risk that I perceive is, if you're now going to build on top of an AI model that's based in a foreign country, and you don't know how Congress is going to react to something that's got to be, in my opinion, murkier than TikTok in terms of figuring out if there's an actual issue, then I think that puts your business at some level of risk to not be able to use that model later on. And so it just makes it hard. It just makes it harder for me to want to invest in businesses that, as a U.S. resident, would make it harder for me to invest in a business that was using an offshore AI model. In that, I don't know how to predict the future actions of the government, and so regulatory risk here strikes me as higher than normal.
Yeah, I agree with that. I agree with that.
All right, so let's pivot quickly into travel before you and I need to move on for the day. You know, as we've talked about a bunch on the show, I'm trying to invest in 10 travel startups every year for the next 5 years. And in looking at the market, you know, I think there's been a shift towards a different sort of business travel. And that business travel is more focused on companies that are doing retreats or smaller get-togethers as part of sort of like this, you know, remote work model, if you will. And I'll be honest, I was a bit surprised. I think I was glad to hear that you were as surprised as I was about this next story that we'll put in the show notes. TravelPerk is a brand that's been around for a handful of years, focusing on this model of, you know, decentralized business travel is probably the best way I can think about it. And their most recent raise is a $200 million raise for a post-money valuation of $2.7 billion. And we're starting to get into that territory where, at least from what I've seen, it's harder for companies to be raising money in this area right now. There's plenty of money at the seed and Series A level, but there's still this backlog of companies going public, which has sort of backed people up into the D and E rounds and making it tougher to close. And here's a company that now has a valuation that's, you know, probably top 10 might not be the right number, but in terms of like in this travel management space, you know, Expedia is the giant, even though they're a poor quality product, at like a 20 billion market valuation. So now you've got TravelPerk playing in these frothy, large valuations in this space. The article talks about another company called Engine, which is a similar version of TravelPerk that's US based. They have a $2 billion valuation. I think it's really interesting. I still don't know if I'm allowed to talk about this investment that we're making in this space and a founder that I have a ton of faith in. But a lot of people are going after this space of trying to inject themselves into travel. And not to get lengthy here, but I think one of the things that the article talks about with these companies is that they're pulling in the expense management side of things. And the only thing about this article and this mindset that I think is a little bit sort of behind the times is that, you know, I think that if you're going to be a travel platform in today's world, expense management really is table stakes. If you don't have robust expense management, I don't see how you can keep the sort of businesses that these companies are going after for a long time. Because at the end of the day, as you well know with these companies, when the market turns down, they want to turn the dial down on cost. And so if their travel management platform doesn't allow them to do that in a robust way, they're going to switch, even if it means the user experience is worse. This is how Concur has grown so significantly, because their cost controls are great, even if their consumer-facing stuff isn't very popular. So, you know, the fact that brands like Engine and TravelPerk are focusing on this expense side is important, because I think they need it. But again, I think it's really become table stakes in this world that if you're going to be successful in managed travel, you have to have robust cost controls.
Yep. I mean, you probably can say this more coherently than me, but actually two things I think you can probably say more coherently than me. When you look at the valuation of this company, at least what it's reported at what is it, $2.7 billion. In a vacuum, that's a lot. In a vacuum, it's like, oh man, for a travel company, right?
Yeah.
But, hey, on the flip side, now you anchor it against Expedia's market cap today. Time of recording is at like 21.7, maybe $22 billion.
Right. Yeah.
So, okay, well, that kind of makes sense. The other thing that comes along with this is that travel and expense management is janky. I mean, it's like, and I'm a small player in the industry, right? But still, you've got, expense management systems that are like, we're transitioning a bunch of like janky systems into Rippling. We're actually moving our payroll and other systems into Rippling here over the next month or two. It's still janky. It's like, I'm sitting at a lunch in Nashville. What do I do with this receipt? I'm visiting a customer, or that's under, sales and marketing. Oh, I don't know, meeting with an investor. Well, that's G&A. And so it's still janky. And I think to your point, what you called table stakes, I couldn't agree with more. Like that whole travel system needs to kind of clean itself up. I think, when we were first talking about this in the pre-show, I wasn't quite sure where this would go, but maybe this is going to be one of those things where like one of two things is going to happen, could happen over the next couple of years here. It's that one of these types of companies, like I don't know Travel Perks specifically, right? But one of these types of companies is either going to get acquired up into something like a Rippling, which I'm not an investor in, right? I'm just a customer. But like the promise of these all-in-one HR and payroll systems, is pretty good when it comes to like employee benefits and things like that. Still a lot to be desired on expense management and all these things, especially in a remote first world where we're all traveling more and all that. So maybe this is going to go one of two ways. Somebody like a Travel Perk eventually gobbles up Rippling or one of their competitors, or vice versa. One of those people, grabs one of these and then truly makes the all-in-one, operating system for businesses.
Yeah, I'm going to editorialize here for a minute. And this is, I won't say completely uninformed, but, certainly it's not like I'm a true expert in all of these platforms, but I studied Rippling. I actually wrote an article on them for a site. And I think here's my thing. I actually think that Rippling and, Engine and Travel Perk are in different lanes. And I think to your point, I think Rippling is going at this from the standpoint of managed spend, not managed travel. And I think those are two very different things.
That's true.
And so I do think they swim in different lanes, and I do think they can exist in different lanes. I think, at least from what I've seen so far, look, you're absolutely right. Like Rippling is, I forget their numbers, but they're like $10-15 billion market cap, something like that. So certainly they could absorb or acquire something like a Travel Perk. First off, I think that would be a mistake for a company like Travel Perk, because I think that there's more room to grow on the side of managed travel than there is on managed expense. I think the sales cycle on managed expense is long. Not for companies of your size, for sure, because you're a small to medium-sized business, you're going to make a decision. But for them to acquire, larger companies, I think it's a longer sales cycle. And so I think where I think companies like Travel Perk and Engine and the company that I can't talk about yet have more potential growth is that as companies expand into this new model of business travel, whether it's hosted events or guest travel or whatever you want to call it, they're not necessarily looking for expense management in the fashion that Rippling is providing it, where, for folks who don't know Rippling, it's like as soon as the employee is hired, you can issue them a credit card with specific spending patterns. And Paul was hired as a sales manager, and because he's a sales manager with under 1 year of experience, he's allowed to book an airline ticket up to $600. And if he's traveling within 10 days of travel, that $600 goes to $700 to take advantage of the pricing, to figure out the pricing edge in the market for a last minute ticket. That's sort of their focus. Where Travel Perk and Engine are focused more on helping plan business travel, whether it's retreats or things like that. And I think just at a high level, I think you're still going to see more companies moving into that other bucket where it's like, help me get it done as opposed to help me control the cost. I think people transition into help me control the cost further down the road. At the beginning, at the outset, I think the hook is the assistant in the office who's overwhelmed making travel arrangements for 10 people and filing expense reports and all that stuff, and they're trying to manage it, and they find somebody else to help manage the meetings. Yeah. So I definitely think there's more growth on that side, and maybe Rippling could pull that in, but I do think there's enough of a cultural difference between the two that I'd personally rather bet on the travel side and have consumer-facing tools that everybody liked, because I think the expense side, I don't want to overly simplify it, but I don't think the expense side is terribly difficult to build. It's, these are all rules-based things, and if you see someone else build a smart rule, it doesn't take a lot of dev time to build that same rule. Feature sets for expense management should be easy to mimic and hard to have a moat around, how we manage Paul as a new sales manager and what rules he falls under.
I know you don't have like inside info, right? Because we're not in this deal, but just out of curiosity, like if you had to guess, again, with imperfect data, what do you think what is the back of the napkin justification for a company like this to raise $200 million and effectively double its valuation in a year? Like, is it Do you think it's anchored to, obviously there's a lot of factors that probably drove into that, but simplistically, do you think it's because they've closed more B2B contracts over the last 12 months, or the rate has accelerated? Do you think it's because, what do you think it is? Like, just the simplistic version.
Yeah, my guess would be that, especially when you're talking about now they're folding in expense management, because part of this raise, at least for travel perks, seemed to be to bring on a large expense management platform and absorb it into their side. What I think it is that, well, it may be the B2B channel accelerating. My guess, as you would say from an uninformed standpoint, my guess is that their recent funnel is probably overperforming. So they brought in company Y. They brought in Paul Singh's company, and they expected Strata to yield, X number of travel instances that the company could earn money on over the next 12 months. And in the first 4 months on the platform, Strata is performing at X plus 30%. And so as they see that the inbound leads are ramping up their activity on the platform, the money does two things for them. One, it allows them to accelerate the sales process to get people into the funnel quicker. And two, it allows them to bring on a piece like this travel expense management piece. I don't remember it from the article, but like Yokoi or one of those companies I'm not terribly familiar with on the expense management side of things, to now say that if we're accelerating the growth of all these companies on our platform, and now we can sell expense management to all of them, we can increase the ARR of all of these clients, by some factor. So that's my guess, is that as companies are being onboarded, they're overperforming on the platform, as opposed to people coming on more quickly and the funnel being more exciting. That's my uneducated guess.
Yeah. Yep. That makes sense. So I think you've alluded to this too. Like, for a company of that type at a 2.5, let's just round it up and say $3 billion valuation, what it seems like the number of possible exit channels gets smaller and smaller. So it's really like, okay, there's IPO chances, like there's an IPO path for something like that. Actually, there's technically three. There's certainly the chance of a down round.
Sure.
Then on the other extreme, there could be like an IPO path that they're probably going to go out. And then that middle path is like that the world of companies that can even afford to absorb something like this later on gets smaller and smaller. And so they're taking that bet that, the Expedia of the world or somebody else would. Are those like really the three outcomes you think of a company like this? You're rolling the dice on down round versus IPO versus a few smaller players. A smaller and smaller network of players that could afford to buy you.
Yeah, and I think you and I know that the IPO market seems to be congested. So
Right.
that's a little bit troubling. I think, like another player in this space is a company called Ramp. They're somewhat similar to Rippling. They rhyme with what Rippling is doing. And their last valuation was sub 10 billion, but I don't know, somewhere 6, 7, 8 billion, somewhere in that range. So there's a handful of companies that are sort of accelerating through this space. And while they may consolidate, you and I talked about this in pre-show, I think the path for a large acquisition is narrow, unless I'm just missing something. But I think if Google were going to be getting deep into the space, I think they would have already done something with ITA Matrix, which is a company they bought a number of years ago and have now folded in to their core technology. So like I don't see Google being the player here per se. I don't see Amazon or Microsoft. This just isn't really in their wheelhouse. So you start to run out of companies where this makes logical sense for there to be the sort of acquisition that would make sense for them to be able to digest it easily enough. I mean, there's obviously a more favorable, merger market now under a new administration. So maybe these things could happen more broadly, and
Right.
I'm handicapping it too much. But I do think to some degree, I think this is more of an IPO play. And I think if I were an investor in a company that was worth 50 to 100 million right now in the travel space, and a company like Ramp or Rippling were trying to acquire them, I mean, I don't think I'd have a big enough stake to be able to block it, and maybe I'd be wrong to think about blocking it, but I would be nervous about taking shares and not cash in a Ramp or a Rippling without having a clear path to an exit. It's not because I don't think Ramp or Rippling can exit. It's just you and I both know the IPO market is very congested right now for companies that are trying to break out into it. We have a company that we've invested in back in 2011 that has a multi-billion-dollar valuation and is still struggling to get out into a public raise.
Yeah.
So certainly these companies could break through, but I think you and I both believe that there's still something of a glass ceiling on IPOs.
Yep. Yeah. I mean, I think, well, actually, I could probably talk about this forever. I do think it's an interesting gamble though, because it's one of those things where it's like, you're either betting that, so when you raise money like this, I mean, we've talked about this before, right? It's the treadmill. The treadmill gets faster and faster and faster. Expectations rise as more and more money. I mean, in this case, TravelPerk looks like before this round had raised $660 million of equity and debt capital over the last couple of years. So they're making a bet, by taking another $200 million, and they're basically either very confident about what they can achieve over the next year or two, or taking some, they're feeling very optimistic about some potential exit options over the next or the same time period as well. That's a pretty gutsy move.
Yeah. Yeah.
So that was a nervous laugh, by the way, not a, but hey, good for them, and it is cool to see a European company doing something like that. And I mean, I don't mean this in any condescending way, but I feel like it's very, very rare to see, multi-billion-dollar valuations here, even in the US, but to see it in Europe, that's exciting. I mean, one of the best performing companies still on the 500 side of things is a company I invested in out of Portugal. So it's kind of cool to see larger valuations growing outside the US. So
yeah.
All right, so you're gonna get TravelPerk, get five guys onto TravelPerk now. Is that the outcome here?
Yep. That's as soon as we land this plane, no pun intended. That's where I'm headed.
That's right. That's right. I love it, man. All right. Where are you headed to next? You just got back from Disney, which
I did,
looked a lot of fun through your Instagram reels.
Yeah, we definitely had a lot of fun. I have a quick trip to New Orleans this week for some work stuff, Vegas and New York next week, and then probably grounded for a few weeks with some more sandwich parenting. Father is having a knee replacement. So for those that don't know the term sandwich parenting, if you have kids, there is no more special time of life than to be parenting both up and down the food chain at the same time.
Yeah.
How about you? Any travels come up? Any more exciting time on United Planes?
Yeah, I've been doing a couple of day trips out to visit some clients and prospects, and board meetings and stuff like that. So nothing crazy. Dallas, Nashville, Florida, different places in Florida. Maybe something up in Connecticut here soon. So just quick kind of day trips out and back. Yeah, nothing like you, man. Maybe Vegas in March. We'll see. We won a pretty large award that I can't say much about on the show until
Vegas.
next week.
There you go. I know. I've been to Vegas before.
Yeah. Well, I was just thinking last night. I was like, I should probably text him and see where I should go to dinner.
Yeah, or tell me when and where, and I'll go to dinner with you, and maybe I'll Snapchat you in a
bag of money
in a risky way that that puts you at financial and reputational harm, and the chance of getting beaten up in an alley, just so we can get even. Well,
I still do wonder where those dudes actually do, but maybe it's better I don't ask. So
yeah, probably.
Yeah, there are a lot of tattoos under their suits, but that's all I'm gonna say. You hang out with quality people, my man.
Yes, I do. I do. It is Vegas, man.
No comment.
All right, man.
All right, man. Good seeing you. I'll see you out on the road, or maybe one of these less than spectacular United clubs at Dulles.
Talk to you later.
See ya.